thank you so much for such a warm welcome, Rolly, and for everyone at Trading Pub for organising tonight or today. I must comment that when I started researching trading websites, Trading Pub, before I even knew about it, was one of the first I found, and I always thought it was a high-quality place for education. So it's a pleasure to be here, and it's a pleasure to present to you. This is the first time we've ever talked about this topic in the public arena. And I know it's a vague term, but let me tell you what it's all about and what it means to me as a trader. Because I think that when we look at the statistics of why 95% of people lose, and when we start to look at the fact that, you know, everyone, well, when I first started trading 12 years ago, hardly anyone knew about technical analysis. When we started teaching it in 2007, people thought I was nuts. They thought it was voodoo, and who the hell was I to say that fundamentals were out the window? Now, high-frequency trading is paramount. 80 to 90% of the volume, some people say, comes from high frequency now, and then a lot of people who are making any money. So how do we start to get an edge on the rest of the market if we're going to be able to have if we're going to outperform the indexes and outperform those other traders? And that's what tonight is all about in terms of the secret sauce. So obviously, standard disclaimer, we're going to take a lot of questions at the end and talk about live stocks that we're in right now, talk about stocks we're looking to enter tomorrow, and look at some of our recent performers. So obviously, standard disclaimer there that we're not making recommendations, it's purely for educational purposes. So as I said, what is the secret sauce? You know, most exceptional trade results come from detecting an inefficiency in the market or some factor that gives us an extra edge over what the rest of the market sees. So, I mean, that's the basic definition of what the secret sauce or special ingredients are. So, what are the special ingredients that I look for, or what are some of the most powerful ones that I've used, I think is obviously the question. And when we look at what information is available to us, most traders only look at price. Right? They only look at price, and they look at absolute values. You know, what is price doing right now? And is the RSI over 30? These kind of very absolute ways of reading information instead of relative ways of reading information. And so the first special ingredient, and it may seem very simple, but it's divergence. So looking at relative information. So when is one thing moving against another where it doesn't quite add up? We're going to talk about a few types of divergence that I find very powerful to look for. Obviously, we can talk about emotion in the market, detecting when emotions are at the highest against what the actual market itself, what the underlying smart money is telling us. So smart money. Who are the insiders and institutions that we need to be watching? Where do we find the information and scan for the information to detect what they're doing? And what information is meaningful? So we're going to talk about all of that and show you how to scan for this and using free online tools. We're going to talk about the short float. How can we use the amount that the stock is shorted to empower our trades? What should we be looking for in terms of the short float? Why is it meaningful? Who is shorting the stocks? And what kind of data can we find, again, with some of these free online scanners? So I'm going to go through that with you as well. So let's start with divergence. So divergence, as I said, as you see on the right, if the words don't add up, it's usually because the truth wasn't included in the equation. I love that quote because basically, what we're looking for when we're talking about the special ingredients is we're trying to find when something's going on that the rest of the market isn't seeing. So, you know, for example, when the market is topping out and there's all this hype talking about why the stock's going to go through the roof or the earnings are going to be fantastic. And this is, by the way, a very valuable topic to be talking about right now because we're going into earnings, of course. So, for option traders, this is very, very valuable for people playing those option breaks. So what we're looking for is, when is the stock rallying, and all this hype is simply there to encourage buying so that the smart money can get the hell out. So divergence is a very powerful tool to use that, and we're basically looking for where often the most common use of it is when we're looking for obviously price moving opposite to the direction of a correlating indicator. So what kind of indicators do we want to use? What is the most powerful to use for divergence? The most powerful indicator I use for divergence is money flow. And I use a special indicator called Twigs money flow, which we've programmed into Metastock and Incredible Charts and Think or Swim and so forth. So it's available out there. And what basically money flow detects is it detects where the smart money is going. So how money flow works, as you can see this on the bottom, is it looks at the signs of a true uptrend. Okay, so an uptrend is often defined, I mean, everyone in the room, I'm sure you've been trained on this. What is an uptrend? An uptrend is higher highs and higher lows. But is it? I would challenge that. Higher highs and higher lows doesn't mean an uptrend. It might mean technically it is, but is it an uptrend that will continue? Is it one we want to find? So what a real uptrend is if we get higher highs and higher lows, as well as increasing volume, and closes in the top half of the range, and those highs and lows increasing. So that's what a real uptrend is, and that's basically what money flow does. It looks at all of that and plots it on the chart. So what you're looking at on the bottom of the left-hand side of the screen is you're seeing money flow as is the smart money loading up or getting out. And so divergence with using this indicator is very, very powerful, because in relation to this stock, for example, you can see that the stock was going down and actually dropping from about $28 there in September 23rd to $24 in October, and even further from that, from 32 in fact, all the way down to 24. But what was the smart money doing? The entire time this stock was plummeting, the smart money was increasing. We were making higher lows, and the trend was up, even though the price trend was down. This is incredibly powerful, because if you look at some of the big, again, I'll talk about the earnings plays potential, and I'll just bring up my chart for a moment. Look at that quote-unquote surprise drop in Netflix last year. I mean, that took people by surprise. I just want to talk about this specifically because I've been asked about it quite a fair bit, because this was one that we published on our YouTube channel, and we called this. We picked this to pick up $380 puts, way out of the money puts before earnings, and the whole reason but why was that we had this potential head and shoulders pattern. Okay, we were coming down, and then we looked at the extension of that head and shoulders and said, whoops, let me just get some of these other indicators off the screen. Talk about analysis paralysis. Just clean that up for you a little bit. So here's divergence in its essence. So here's my trend line. So then you look at the head and shoulders, and you look at the extension, and that's why we thought it was going to drop to at least below 380. And it did. And those options went up 1,000% overnight. But what was even more powerful is that you can see that not only did we have a technically weak pattern, but we also had divergent money flow. So the entire time that price was trending up from left to right, money flow was flowing out, and in fact broke negative, which means divergent, complete sell-off, here in September 15th. So this was one part of the trade that made this a strong sell for us. There are other parts to this, and I'll talk you through that in a moment. But so this is in the case of a price drop. So what we've just looked at is an example of that, where price is increasing, where smart money is decreasing, and that's what we just looked at with Netflix. Okay, now, so if there's any stocks people are interested in having a look at, by the way, to start applying some of these tactics at the end of the session, by all means, please throw them up in the chat window. We'll use examples as we go through everything today. So that's divergence. And what divergence often relates to is the emotion in the market. So when we see divergence occurring in money flow and other indicators as well, what we're seeing is that price is misleading us. That essentially the smart money is selling to the retail money. But one of the things that often people ask me in our classes is, when do we need to, when does the trend of smart money start and end? Like, where do we need to look for the change in divergence? So I want to talk about that now. So when you're looking at a divergent trend, what we need to detect is, what we need to look at is, where do we start measuring that divergence from? Are we looking from left to all the way on the right? Or, because others may get confused and say, well, no, I mean, I would have looked at that and said, hey, money flow actually is going up from this point to that point. They might say, oh, well, no, money flow is increasing. So sure, I'm going to go long. So it's important to actually look at, where do we start measuring trends of divergence from, and where does it end? And the answer to that is looking at where the new highs and lows begin and end. Think of any kind of trend. When does a trend start and end? A trend starts and ends when it goes from making higher highs and higher lows to lower highs and lower lows, and does the reversal. So the same thing with an indicator. So if you look at the trend of the money flow, you'll see that we never broke a new high. Even on this bounce, we never broke a new high. It was continually down. And we kept making new lows. So we measure the trend from start to finish. If you look at, I believe, CHK was another one. Yep, this is actually one that we went long on at, I believe it was $14. I think I actually still hold this in my portfolio for full disclosure reasons. And have a look at that. I mean, you can basically see that where we start turning is here. We start turning and making higher lows and higher highs. So we measure at the beginning of where the divergence occurs from here. So we can see that as price basically went sideways, right? What was the price here? $14. What was the price here? $14. What was the money flow? Loading up. Money flow went from negative 30% to, on that specific day, negative 14%. There was a 50% change, in other words, of the value of how much smart money was going in. That's a big difference. And that is divergence. That is the secret sauce. And that was one of the key reasons we bought this. And we saw that across many other stocks in the energy sector. And there's an easy 10%. Easy. Or if you're trading options, that can be upwards of 50 to 100%. And that's the secret sauce. So there's one part of that trade. So you can see that kind of where we start and end that divergence. Rex was another energy play. Same kind of thing. Look at where the divergence begins. Stock flattens out, sharp increase in the money flow. Okay. All right. So we'll look at lots Lots more, a lot more examples here as we go along. So that's the next thing. So that's where do we start to look for the trend beginning and ending? The next thing that's very, very valuable is obviously looking at not just the technical indication of smart money, but actually examining who specifically may be responsible for it, right? So when we look at this Twigs money flow, what it's doing is it's going for the type of volume that occurs when smart money buys or sells. All right, so if the smart money, if big money is loading up, they're going to be buying and holding. That creates big volume, it creates higher closes, it creates volume that sticks instead of getting out. So we can assume that someone of some substance is probably involved. So when we're looking at examining that further, we can say, well, basically, what are they? What are insiders institutions? Obviously, insiders are people that have inside information on the company. They are people that directors of the board, people that work for the company, or people that may have a 10% interest or more in the company. Okay? So in other words, these are the people that know the most about the stock. The stuff that the public doesn't know. Institutions obviously are the next, should be the next brightest individuals that may know the company fairly intimately. So how do we find them? And what information is relative and relevant? And what about the track record of these insiders? Are they credible? Should we even bother listening to what they're doing? Okay, so for that, I'm going to show you a website which I'm sure some of you have all used before. Now there's two websites you can get this type of information from. The first is probably the better known one, and that is FinViz. Okay, so on FinViz, very simply, you can go into, click on Insider at the top, and what you'll actually see here is you can see the three different categories: latest insider trading, top insider trading, and top 10% owner trading in the recent week. So here we can go and say, okay, well, of the big boys, the people that own the most of the company, what are they all? And this is also good, by the way, for just getting a picture of what the market sentiment of the smart money is in general. What is the smart money doing at the moment? Smart money is selling. The big boys of the world are selling in $2.6 billion amounts. So this can be an excellent way to actually go in and look at potential stock plays. So you can just scroll your mouse over. Look at that. So there was they sold $18 million worth of the stock on April 6th, right? So that was 3 days ago. That was on Monday. Look at what happened to the stock today. Plummeted. Maybe that was an earnings announcement. Okay? You've got Burlington stores, discount variety stores. Have a look at that. Anyone spot the trend? Right there, you can probably see that's a descending triangle. Right? That's breaking. Looks like it's breaking right now. So this is an excellent way to just, if you're very technically inept, not inept, if you're technically skilled, you can go in here and actually just scroll. If you spot a chart that you like, I mean BRX, great example. Again, that was a top 10% sell on April 6th. Several big transactions, in fact. On April 6th, you can bring it up then on your chart. Let's say you'd spotted this on April 6th. You can see I've already graphed this up. So it broke the trend here, rallied up and faked out, retested from beneath, and then on April 6th, that was when the insiders gave it to the market and sold off. And there was an excellent shorting opportunity as it broke that trend right there. Okay, so potentially a very good options play from 26.50 down to 25, and it'll probably go down and hit 24.50. So an easy 10% or 50, 100% on an option, right? Easy money. When you start to look at where the smart money is coming from, it tells you a hell of a lot about the market and where these potential option plays or stock plays could be. But what about looking into it in a little more further? This is a very easy but a very crude method of analysis, because what we're doing now is we're just looking at any stock that has insider selling. So now we're subject to our technical skills of being able to scroll your mouse over all of these different stocks and be able to recognize the pattern. Now that's easy for me to do, but I've spent 50 hours a week for 14 years or 13 years staring at these things. Not everyone has that ability to see exactly which one of the 100 different patterns exist out there, and there are about 100. If you don't feel confident in your skills to be able to know which of those 100 ones it could be, and if it's a higher probability pattern, we need to add some more to the equation to make our results a little more refined. So how do we do that? This is where we can now start going into the screener. Okay, we can go into the screener and we can say, all right, well, maybe we want to, maybe we are looking for an options play or an earnings play, and we can go in and say, hey, let's go in and search for stocks where they're reporting in the next 5 days. Let's look for stocks that have negative insider transactions. So the insiders have been selling. Okay, and that's for the last 6 insider transactions of selling in the last 6 months. Then we could go into institutions. Let's get the institutions selling also. And so what you can see now is we've now actually refined it down, and we can see that there's actually 5 stocks where there's been both insider and institutional selling that have earnings in the next 5 days. And this again can be where we could spot some possible trades. What do you see in this trade here? IGTE. IGTE to me jumps out as it's either a falling wedge, which would be bullish, or a descending triangle, which would be bearish. And this is where we can then start doing our analysis. But what else do you notice that is actually quite interesting about this stock? At first glance, you'll see that it's got a reasonable sized market cap, so we can be fairly confident it's got a very good option chain. Or from a stock standpoint, it's got enough liquidity. Now, I'd never hold a stock into earnings. I would only ever play options in earnings because so you can limit the risk. But just from a stock standpoint, you can see that it's liquid. What do you see about the P/E ratio? 517. Now, this is key when you're looking for shorts, especially around earnings. If you have a stock that has a high P/E ratio, what does that mean? It means that the stock is selling at 517 times what its earnings are. It's like if you came to me and said, John, your carpet cleaning business, I want to buy it off you. How much do you make a year? Well, I make about $1 million a year. Okay, I'll buy it. How much do you want for it? $517 million is what I want for it. You got to be joking, right? The only reason you can value something at that kind of multiple is if there is some massive potential for this business. Maybe this business only made $1 million this year, but I own a patent for a spray that makes stains go away instantly, right? Now it's maybe a bit more valuable. So the things that we want to be looking for here are some of these key factors. Because if this is so valuable, if this stock does have the magic stain remover spray, why the hell would the insiders and the institutions all be selling and potentially in large amounts? So this is where we can get a trade idea from, and now we start to look at what is it relevant information and relevant selling. So of course we can always bring up the chart on IGTE. We can also now look at what the money flow is doing. Aha! What do you see here? What we can see here is that from this point on, Twig's money flow was divergent. Right? As price went up, smart money started to stop accumulating. And from this point on, it dropped significantly. The price didn't. In fact, if you look at the difference in price, this is again the difference between just looking at the chart and saying, what does the indicator say today? That won't get you anywhere. Well, it might get you some of the way, but that's why most traders lose, is because they're always looking at what does the magic indicator tell me. You can't look at indicators absolutely. You have to look at them as like a detective. What is it telling me? What's the story behind the indicator telling me? And so when you look at this relatively, now we have the insiders, the institutions selling. We look at the chart, we can see that we've got from this date over to this date, we've gone from 28% on the money flow when the stock was $41. The stock is now $41 and the money flow is negative 7%. So we've seen a 34% decrease in the smart money on the same price, at the same price level. So this is potentially a very interesting play. And if this is indeed a descending triangle, like we graph here, then we should also know that a descending triangle, of course, is bearish as well. So now we've got several things confirming a potential trade. But that's not enough. How do we get into a little more of the secret sauce? Well, now I'm going to show you a different website. And of course, you could go through and actually, obviously, you go through and look at the rest of these, but we'll come back to that. Let's go now to Insider Cow. Okay? So this is a great website for actually going in and looking at exactly what is happening with the stock. So let's go into IGTE. Okay, so IGTE, what we're looking for now is when did the insider selling occur and at what price? So the insider selling occurred recently in February. And we can see that the prices were about 700,000, 1.3 million. Okay. And what price was it at? It was around $40. Now, this is important because when we look at the chart, well, we look at the price, you can see the close is still at $40. So basically, they have valued, like the way I read this is that they have valued their own company as overpriced. They're happy to take money at these levels. Okay? Now, if the price was $20 now, and they sold it at 40, then it's not so valuable. Because, if I sold a stock at 40, and it was all the way down to 20, well, I'm obviously quite a prudent investor. But maybe at 20, it's a bargain buy again. So you've got to make sure that the price that the selling was happening at is close to where the price is still currently, and there hasn't already been a massive drop, right? Second thing that you need to look for is you've got to look to see if it's broad-based or not. Because just because an insider is selling doesn't mean the company is going to hell. You never know why he might need to get out of a company. Okay, I mean, maybe his daughter's going to college and needs a new car. Maybe she's not going to college and she needs $8,000 to go travel the world. You know, who knows? Insider selling can happen for a lot of personal reasons. It can happen for tax loss purposes. There's lots of reasons. So what we want to see is we want to see broad-based. And here we can see that it's not just one person. It's the president and CEO, the executive vice president, the director, the chief financial officer. So we've got 4 different people in a position of significant power that have recently sold. Okay. The other thing that we can now do, if we want to really dig into it, is we can now actually look at what their track record is. So do these guys have a history of actually buying and selling at interestingly well-timed points? So we can go in here and say, well, what's Martin McEwen's track record been like? He seems to have sold a fair chunk. Right, on the 23rd, you can see it's also around the same date. So what's Mr. McGuinn's, I'm not going to try and pronounce it, track record like? And we can actually now look up when his transactions have been in the past. And we can go in and see, like, not just on this company, but other companies that he's involved in. So we can look back and say, all right, well, there was a sizable transaction here, 693,000 on the 23rd of January, it looks like. I'm reading that right? Yeah, 23rd of January 2014. So we can go back now and actually have a look at that. So 23rd of January was when he sold, and you can see that the stock went from $37 to a low of 28 and change. So yeah, I'd say that was a well-timed exit, wouldn't you? And what you can do is now go through and actually dig a little deeper. Obviously, I can't do it in the webinar here because we've only got one screen. But if you've got 2 screens, you know, just bring up the chart on the left hand on the left screen. Bring up the insider transaction dates on the right, and just go through and put a line on the chart for each time the insider bought and sold, and start to see if you can track a pattern. And if you can start to find now insiders that have a tendency to be well-timed. Now, I'm not going to point the finger. Who knows whether they're acting on inside information or not. But if I owned a company and I knew it was going to probably go up 50%, I certainly wouldn't sell. It doesn't, because not selling isn't illegal, right? But not selling sometimes tells you just as much as buying. Okay, so yeah, so my point, I think I've got the point across. This is where we can now see the individual track record in the information that we found. So now we've gone through a thorough process of actually start through finish, figuring out a possible trade. We've confirmed it with all the secret sauce. Now, here's one we prepared earlier, as a chef would say on a TV show. Here's one we did earlier in this year. And for those of you who follow us in our executive summaries, you know, we publish these on YouTube. We send these out to our subscribers every day. We usually have about 3 to 5 stocks every day, or sometimes it's only 1, sometimes it's as many as 5. This is one we sent out as our executive summary trade selection, our favorite trade, back here on Tuesday, February 17th, and we entered it and bought it there on February 18th. We then actually sold it. We had our exit target up here at 22, and re-entered the trade when it came back to the support here at 20 bucks. So it was a two-part trade. And for those of you who want the rationale behind why we did that, this is what we call a bump and run formation. This is where you have a downward channel, and then you have a drop of 65 degrees or more to the downside out of that channel. You then get a spoon, you can see it looks like a spoon. There's the handle, there's the spoon. You then get a spoon-like base, so you buy just as it kind of starts going up, and then you sell as soon as it hits the top end of the channel, and that's what the bump and run happens. Bump, pulls back, and that's where you get back in and run, or you can wait for the breakout. Highly, highly, highly profitable pattern. One of my favorites. In terms of ranking, from 1 to 100, this ranks in the top 5. We've gone and actually looked at the rankings of every technical pattern there is out there, and from a 1 to 100 basis, and we only trade in the ones that are in that top 10 category in terms of profits and probability. So this is one of them, and that's why we liked it in the first place. You can see here that as the stock dropped, you can see the money flow was divergent. It was going up as the stock went down. We had a perfect technical pattern, which made it very, very, very exciting. But what was really interesting was when we then went in and looked at the insiders. Okay, now, let's bring up ATRA. So let's look at the date here on the chart. February 18th was when all this really started to happen. Okay, February 18th. So you go back and have a look. We had insider buying happening right on that day. Okay, Carol Gallagher, that one I can pronounce. Also buying previously on the 21st of October, as were all of the other directors, all at $11. Now, when we found it, it was at $20. So we obviously the $11 has already had a 100% increase. Smart money. 18 though was a little bit better, so that was more relevant. But what was really interesting is when we then looked at the institutions. So I've talked about the insiders, now we're going to show you the institutions. What we can simply do is click institutional transactions and look what we get. Now, it's already highlighted, but what name here jumps out at you? Can everyone see it? What name jumps out at you? Or maybe even two names if you're someone that likes to trade biopharmaceuticals. I love biopharmaceuticals. They are a money pit. But the name that should jump out at you is one, Celgene, because they're a competing brand. So they're buying ATRE Pharmaceuticals. Celgene Pharmaceuticals is buying into ATRA Pharmaceuticals. Okay, that's interesting. But the name right above it should certainly interest you. Carlos Slim. Carlos Slim is one of the wealthiest men in North America, and one of the wealthiest men in the world. He owns all of the Mexican telephone companies and so forth. Billionaire. And I found this quite interesting because I've been traveling for the last 4 months, and for the last 2, I've been in Mexico. I'm actually talking to you from there now, and so I thought, well, hey, I've noticed quite a lot in Mexico that there's usually, things aren't always what they seem. Let's put it that way. So when someone's buying in large quantities, and this guy is someone who makes a lot of money in a country such as Mexico, you think, well, I wonder if he knows something. And then, of course, that's one of the big reasons why we were quite excited about this trade. And rightfully so. Carlos is a very bright man, as was the others who were buying, because this stock did end up now on no news, basically going up from 20 bucks to 25 and then continued now all the way up to $45. That's 100% gain, or possibly thousands of percent on options. You know, you just need a couple of these that can make you a year. You don't need thousands of trades, people trading like furiously just to trading for the sake of it. If you know how to look for that secret sauce, and you can spend more quality time rather than a quantity of time doing your research, you can find stocks like this much more easily. And so finally, the last piece of information that we're going to look at is the short float. So, who shorts stocks? What is their short float? What information again is relevant? And you can also look at the track record. That's less important here, but certainly the first three are. So, who shorts stocks? Well, the people that short stocks are generally the more informed, because most of the market, one of the statistics I read was something like 80% of traders don't short, or investors. Most people, 80% of the people in the market don't short stocks. Now that might be because they're not educated enough, they're not aware of it, maybe they disagree with it. Others don't short stocks because they're trading a Roth IRA or an RSP, and feel they can't short, which isn't true, of course, because you can buy puts, and you can buy inverse ETFs that will short the stocks in a specific sector or index for you, right? So everyone can contribute to a short float. So that's the market we're talking about. Kind of the more edgy traders are the ones shorting stocks. So when people are shorting stocks, it's telling you another kind of indication of the smart money. What are those more affluent traders doing? What is their opinion on the stock? So if you see a market going up, and you start to see a stock that's heavily shorted, that hasn't dropped yet, that tells you something. That can be very valuable information, because it's saying that even though the market's rallying, there's some people out there, some smart cookies, that are betting heavily that this thing's done, that it's dead in the water. So how do we find this information? Well, we'll go back to one of our pages here. I think the sand has gotten the best of my mouse pad. It's not cooperating very well. Okay, here we go. So let's go back to FinViz. I'll leave that original site back up. So let's go to FinViz, and we're going to go into Screener. And what we can do here is we can actually now, once again, we can actually go for the short float. So you can see we can actually go and scan, for example, for any company with over a 20% short. So 205 stocks have a short float above 20%. Now, there's a number of ways we could combine this now with our strategy. We could then say, again, earnings in the next 5 days. And we've got 2 companies. So, hang on a second here. Let's just get this window cooperating a little more. There we go. So we've got LAYN. We got TPLM. That's actually I wish I'd seen that 2 days ago. This is a great example of how you would have used this strategy. TPLM. So you could go in, and what you can do when you're looking at these, looking at short floats, is you're going to want to see what the short float is. So what you can do is, rather than just clicking overview, you can actually click on basic. And that's what I should have done in the first place, actually. And you can actually go and scroll through all the stocks. So you can see that LAYN has earnings on April 13th before market. You can see that it doesn't have a great volume market cap, so you have to look at the option chain, but short float's 21%. Institutional transactions are negative, so there's institutions. So there's one, just an idea. But this is actually a perfect example of how you would have played this using the short float. If you actually look at this chart, this is a high probability short. What's the symbol again? TPLM. Okay. This is exactly how I would play something like this. Had I found that a couple of days ago, you can see this had beautiful beautiful double top. So we'd broken down, we'd broken the uptrend here, we then formed temporary support there, which was once again broken. Right, this mouse is gonna. There we go. Okay, we got temporary support. Then you have an inverse head and shoulders. Okay, so you can see left shoulder, head, right shoulder. Okay, 1 second here. And then you can see basically, there we go. There's the neckline. And if we go from there to there, you can see the distance from 544 to 490. So we're basically dealing with a 50-cent difference. From the neckline to the head is 50 cents. So we're expecting a breakout of 50 cents to the upside. So it went up 50 cents exactly from 5.50 to $6, and then hit the double top, and you had a high short float. So perfect example of how you'd locate a trade. I would have put a short in on that right there, as it right at 596, 595. I would not have waited for the reversal. This is not a trade you wait for the reversal on. This is an extremes trade. If you're trading double tops, I would never wait for the reversal. I just spent 2 hours talking about this in class last night. If it's an oscillating trade, you sell the resistance. You don't wait for the moving averages. You don't wait for it to cross. This is a short right there, and an easy money. Look at that. Straight down. This should probably get all the way back down to $5. So there's a 20% return off again, just using a simple analysis or simple methods of finding these things using the secret sauce. Okay, so there's your short float. I see a couple of questions. Are you using method away from earnings? Yes. Yes, I mean, because we've just talked about, I've just used earnings as an example, but you could also combine this with other things. If you're a fundamentalist, you can combine it with, you can look for weak fundamentals. If you're a technical analyst, you can go in and you can combine this with technical aspects of, maybe breaking a particular support level, or a particular candlestick pattern. right? So this is where you can then kind of put your scanning skills and your knowledge to the test, adding short float as a criteria. Okay, so as you start to do that, you can add the insider transactions, for example, negative, right? And so there's 91 stocks where the insider transactions are negative and the short float's to over 20. We could increase that to 30. Okay, so I think you get the point. Okay, so does the elite mean you are paying for additional features of the website that aren't on the free version of FinViz? It does, but the features, everything, it really actually makes no difference. I bought the elite version simply to have, to see what, because I wanted to be able to go into earnings, actually, and I wanted to be able to click on custom, and I thought that would mean that I would be able to say, earnings on a specific day, because I do have a very specific option strategy for trading earnings announcements, and there's a very specific day I want them to report earnings. There's a very specific setup I look for, and we actually teach a course specifically on this topic of options during earnings season, which is teaching that exact strategy, and so they're very, very highly profitable, and that's why I needed this specificity in the earnings date. So we have to do it manually, but that's what I was hoping to get in the elite version, but it doesn't actually help me at all. I don't use any of the elite version features, I guess is what I'm trying to say. So there's no real need to purchase that. Okay, so let's go on. So finally, the last kind of thing that you want to, I've shown you the general way to search for this, but the other thing I want to show you now is also how to look further into it, just like I did with Insider Cow. The other website that I want to show you is shortsqueeze.com. So FinViz is great for general scanning. It's not something that I would really use for, absolute pinpoint accuracy. The scanning it does is fairly general. It's not going to find you stocks that are always ready today. It's going to find you stocks that may be, coming to a point where they might be ready, if you see what I mean. But that could be weeks, days, months. So whenever we go into FinViz, we're generally going to have to take that information somewhere else afterwards, like the charting program or into Insider Cow and so forth. Now, in shortsqueeze.com, what we get to do is we get to look up the actual, the more finite types of information that we would all need. You can also scan for stocks that are shorted in this. You can go. There's a short index. So look at basically all the information on basically where the market's going. Look for short squeezes and things like that. Now, I'm not promoting the site. We don't make any money from that. We're not associated with them, but it's a very good site. So let's go back into short interest. So you can play around with this site. It's very interesting, and of course, shorting is very, very valuable. We can go in and pull up IGTE, for example, the one we looked at earlier. Oops. And this is for Thursday, April 9th, 2015, 20-minute delayed. And we can actually go in and actually see exactly what's happening with the short float. Okay, so we can see that the stock has 4.55% of its stock shorted. That's what a short float means. and we can see what the short percentage increase or decrease has been. So is the amount of shorts on the stock increasing or decreasing? And then if you're a member of the site, you can get some of that more powerful information like the daily short selling list, the short squeeze ranking. So that's some stuff that you can look into. But that's basically, on its own, this is very valuable because it just basically shows us what's going on. And you can even, if you subscribe, I believe this isn't free, but you can go up and bring up the daily short squeeze information. Okay, all right, so that's basically, this is how we combine all of this information into one. Now we'll have a look at some other stocks and trades we're doing at the moment. So we'll come back to that. But I will tell you a little bit about obviously what we do before we go into the live conditions, and which I'm sure is what everyone was waiting for me to do. But yeah, we'll take some questions here, so please get some stocks ready. But if you are hungry to learn more, I mean, you can see that we really don't, I don't really like to have to work too hard to make good money in the market. Who does? I mean, that's why we're traders, right? We want to have our money work for us. I like to travel about my portfolio while I'm doing other things. So the Acorn Wealth approach is very, very much designed to have your money working for you, all about efficiency, scanning, bracket orders and order management, alert systems, basically everything that will allow you to do your analysis at night, put your orders in the evening, and allow them to just do whatever they're going to do for the next 2-3 weeks. So you don't have to touch it. I spend very little time needing to watch the market during the day. I will, because I enjoy it, but I don't have to. Most of my trades are all pre-programmed, and if you like to day trade, that's fine too, but it gives you the choice. So what we put together at the beginning of this year, it took us probably about 6 months. We went through all of the previous classes that we've taught in the last 7 years we've been teaching it, and we put together the Ultimate Trader's Toolbox, which is basically a way to get introduced and start learning all these techniques that that go into this analysis that we use to find things. So it's 5 modules, and it's only 97 for the entire 5 modules. So it's an awesome package. We've had excellent feedback from it. Module 1 goes through all the basic introduction types of things, so that you've got if you're newer to the market, this will just basically get you thinking the way a trader should think. How does high frequency trading work? What kind of algorithms do they use? What's their influence on the market? All that type of thing. And understanding scanning probabilities. Why do we rank one scan? Why do we rank one pattern as a 2 out of 100? Why do we rank other patterns a 50 out of 100? And how to know the difference. So very, very important, because it starts to teach you the ideas of understanding the tools and DNA of the market. Module 2 is about digging deeper. This is where we start to go into something that's very, very, very important, which is understanding the difference between oscillation, consolidation, and momentum. Now, just like longs are different to shorts, I'd say so. Black and white different. So are oscillation and momentum patterns. Okay? Critical that you understand the difference. So when you have 2 stocks heading towards resistance, what do you do as a trader? Well, either you buy it because it's going to break out, or hold it because you expect it to go through the resistance, or you short the hell out of it at resistance, like I was showing you that other stock at $6. You short it as soon as it hits resistance because you expect it to bounce off it like a rubber ball. How do you know the difference? This is the difference between consolidation and momentum. Excuse me, oscillation and momentum. So if you've ever bought a stock when it's been plunging and suddenly starts to recover, and it goes up 5%, crosses over the moving averages, the MACD goes positive, and you jump in and buy it, and it just goes straight back down, I can almost guarantee you that it's probably because you bought an oscillating stock instead of a momentum stock that's recovering. It's actually quite easy to tell the difference, but you need to know how, and that this module takes you through all of that, and also how the smart money plays into that. The DNA and blueprint of the market is the next, where we start to get a lot more technical. You know, I know everyone's heard about candlesticks and trend lines and things like that. Very few people do it properly, though. Very few people actually apply it right, and that's key. I've forgotten a long time ago the names of all the candlestick patterns. You know, spinning top and harami formation and blah blah blah. I don't really care about that. That doesn't make me money. What makes me money is understanding, looking at a candle, what it tells me. And so you'll never hear me talk too much about fancy terms or indicators. I'm all about the basics of what makes you money. And understanding the DNA of the market is where this is taught. We do have in Module 4 where we, a section where we will go into the theory, and this is actually the one module in the course that I don't teach because I just hate fancy buzzwords. But our senior engineer, Roy Rogers, who's brilliant, actually goes through this in great detail of what candlestick theory is and some of those patterns. The fifth module is probably my favorite by far, and we sell this module for $400 on its own. Each of these modules, in fact, is very, very valuable, but in terms of like the knowledge as well as the price value. But the scanning is where it brings it all together. This is my favorite module because this is where we start to take all that information, and by the end of the first 4 modules, now we should know exactly what type of chart we're looking for. What do we ultimately want to buy? What should the stock be looking like? I started filling out filters today, like insider buying, short float. You can get so much more advanced than that because you can have insiders, short float, and the right pattern, and the right earnings date, and the right candlesticks, and the right relative volume. The scans that we use, some of them have 10 filters in them. Right, 10 different things that have to happen. That is why you can do your research in about half an hour to an hour at night and not worry about it the next day. Because if you have scans, they will do the work for you. They will find the right opportunities, and just as importantly, they will get rid of all the garbage that will distract you. And that's a great module that will really kind of bring in all the information, and even if that's the only module you got any value out of, if you're an advanced trader, I'd highly recommend that for you, and it's whether you're an option trader or stocks, that this entire course was something that should help. You can see a review of what one of our students has sent in just after going through module 3. We've had a lot of excellent feedback about the course. It's a combination of all the questions we've had from previous courses and answers that have created light bulb moments for our students and package that into the one place. And finally, the last part of this, which is something that we're doing new, we just started doing this with the last group, is we're now doing a live Q&A session. It's called Putting the Trade Together. And this is an open forum. We don't stop talking until your questions are finished. The last session we did was we planned it for an hour. We were there for 3 hours. We analyzed hundreds of stocks that people wanted to talk about and different things, that questions people had. So it's really there for you. So this live Q&A will actually allow you to come in and talk about any questions you've had throughout your course, and talk about stocks that you found using the scans. We'll run the scans live in the room and try and find things that look good. And we're holding this on April 29th. It's April 29th at 8 p.m. Eastern. And I don't know why that's not on the slide there, but yeah, April 29th at 8 Eastern is when we do the live Q&A. And one of the great benefits of being part of this course is we hold these every month, and you're actually invited back to attend again, so that you can progress through in your experience. Last but not least, for people that actually enroll today, you actually will you'll receive your own designated success coach. Okay, so that basically for people that enroll today, and that we limit that to the first 50 people only. Then we will actually give you your own one-on-one coach that you can call and talk to when you have questions or to review your progress. So and that support is available from 9 a.m. to 9 p.m. Monday to Friday, and that is where we've seen superior success in our students. So those who are able to not just listen to what we're saying, but then able to practice it with us. We've got about 3 minutes left. So if you have any questions, now's the time to ask. So once again, it is all 5 modules for just the $97, and that also includes the Q&A session and the designated success coach for the first 50 people that actually enroll today. We obviously do have to limit it because there's only so many coaches with so many hours in the week. All right, so while people are mulling that over, I'll talk about. I've got two and a half minutes left. I'll show you a couple of the other stocks that we're actually found with these scans this week. This one was published on our YouTube about a week and a half ago. Seed, more of a speculative play. But we called this as a long from 145, I think it was, up to where this double top was. It's a flag formation play, and you can look at the flag, and then the breakout here. So it already hit the target. I think it was 177 was the target, but from 145 to 177, that's a beautiful rally. We've also had obviously ATRA that I showed you. We're also looking at we also looked at GMCR as a long 2 days ago. Right there at 115, you can see that again, that frying pan, the channel, the 65-degree drop, the rally up. Could be forming that bump and run formation. GMCR, obviously a very interesting play. Monster, obviously worth looking at if you're looking at the coffee companies, is in a descending channel, which typically will break to the upside. That's what those channels do. So that's very interesting. Something that we're watching. Mattel. This is a potential options during earnings play. Mattel we picked as a long for an entry today, and again you can see that that channel that it had dropped out of, rallying back up, consolidated. There's the bump, there's the run. We're just starting now. Now they report earnings next Thursday on the 16th, which of course is the day before options expiration. So this could be a very potentially explosive play on Mattel. And if you're part of our Ultimate Traders Toolbox, you'll find out exactly why. So I'd like to thank everybody there at Trading Pub. My time is up, and thanks for everyone for attending.